Hi guys, and welcome back to another YouTube video here on Alchemy Finance YouTube channel. Today we're going to be going back over some Bitcoin, looking at where are we, picking up from where we left off from our last YouTube video. So without further ado, we are going to jump straight in. But before we do that, I want to go and ask you to go ahead and hit that subscribe button if you haven't already. Hit that bell notification to be notified every time that we drop a new video. So guys, let's start out on the daily, kind of picking up from where we left off in our last video. If you haven't seen our last video, go and check that out because this one will make more sense. Just to kind of recap on that very briefly, we just take the structural low down here. This low put in this high then went ahead and put in this low. This low then went and put in a new high. And so what that means is that this low right here becomes a protected low because this low caused a break of structure up here. Break of structure. So this low down here put in a new swing high that broke structure, making this a protected low. This high then was due a pullback at some point, and price really started pulling back as we, of course, at these prices Bitcoin is at an all-time high, but once price had a change of character, which essentially just means the demand in which put the highest high in was broken and was taken out by a supply level. That means there is more supply than there is demand, causing price to decrease. So we have supply level here, an area of heavy supply that came in from your BFIs, that be banks and financial institutions, those who have the power essentially. And then of course in the process, this swing low put in a swing high, like an internal high up here caused from this low. So as you get more internal, you can see that our low down here puts in our high up here. Then this high changes character to the downside and starts pulling back until then once again it was changed character once again. Our supply level, which came from in here, this supply level right here was broken through by demand. Where is that demand? That demand persists to sit right here. Demand sits right here. So this is the demand then that ended up putting in the swing high from the decisional. So you have two zones, right? We have our decisional because price put in a high. If we pull up a fib and take the fib from low to high, do excuse my settings. Take the fib from the low to the high. You can see price does pull back 50%, which completes its pullback phase. So price can go ahead and put in a new high right now, and it does exactly that. And then this is the demand really that puts in the swing high. However, this structural low here is an internal structure point and is of course important, but not as important as our swing structure from an external perspective, because this is more internal price action. And as we can see, the breaker structure isn't, the key breaker structure isn't this one here. This is internal breaker structure, which can be very much more clear seen on the lower time frames. But our main breaker structure comes here from a swing perspective, and it was this low that put it in. So then we have our absolute extreme, which just means like the original, which is our demand level in here, right? Our daily demand level that was put in here, which is refined. If we go ahead and drop onto the weekly, we'll see that that daily demand actually turns into weekly demand, and we can see if we pull U over here and look at this as a swing low here, which was, and then of course this being the swing point, we can see the same thing, right? It's just on a weekly perspective instead of a daily. We can see that here was our demand, and that was picked up by this wick here. We wicked in, collected our demand level, collected our demand orders, and from those demand orders, price moved 18% in the day. That just shows that there was a large capital stacked in here of buy orders inside this candle once price came in to tag the orders out, which of course refined into the daily was in fact the wick here. When we go to the daily, usually wicks represent that last sell to buy, which is what we look for. Of course, if you come down to the daily, that level will probably look like the wick of the weekly. So back into the weekly again, as we were. So as you can see, the same thing again. Our breaker structure right here. Breaker structure. I'm not sure what's happening there. That was our breaker structure. Our swing low that caused it puts in a high, reacting from our supply in here. This is our supply that pulled back. Supply. Okay, I'm not sure what's going on there. That's our supply. Okay, there's your supply. There's supply, and we'll probably see ever so closely that supply was collected by this here, and instantly as tapping into that supply, this supply level was filled with 25% of Bitcoin's market cap in sell orders from banks and institutions. And then finally it ended up breaking this level, flipping it with this demand here, which is the demand that caused the 20% increase in a day and probably 25% over 2 days, before eventually taking back out that supply level and coming back into our origin of demand, which is where we are currently sat right now. And then inside of this weekly demand, which makes sense because that weekly demand is what put in our swing high. We come back into our weekly demand, we change character, meaning the supply level that put us inside of the demand was taken by demand, meaning there was more demand than there was supply. And my initial demand level was in here. We had a reaction and then a wick out, which is just a clear liquidation. So I don't actually day trade crypto, I day trade Forex, but it's easy for me to read crypto markets because it's all fundamentally the same. So we tapped in, and then we had resting liquidity here of buy orders from retail traders, or just in general buy orders that were taken out purposefully. As we can see with this wick, this is a V-shaped recovery. This ends up being a V-shaped recovery. If I drop down to a lower time frame, say an hour, you'll see the fast move in and move out pretty rapid. That's why we call it a V-shape, because it's aggressive in and aggressive out. As we can see, it looks like a V. That just shows that momentum is potentially shifting because there's such a heavy buy load inside of here. So once we tap into here, once we have our V-shape out, we have our breaker structure up here, and then demand levels in and around these areas here that don't actually get mitigated. Then we created liquidity down here, liquidity which induced buyers. Drop back out to the 4 hour. This liquidity then induced buyers, and as we can see, so we had original liquidity, we have the swept liquidity, and then we had the V-shape out of the mitigation, and then we had the low that ends up putting the high that actually got mitigated. This wick in here had demand inside of it, that demand got mitigated, new high, mitigation, and it's just been heavily bullish since then. And we had our refined levels. So in most recent price action, which is actually what we're here to discuss, you can see we've tapped out of our weekly level, we've got our change of character, we've mitigated. So we've order flow, meaning the flow of orders, meaning the directional of the market has shifted very much bullish, as we can see. And we can see that our daily demand, meaning the demand level on the daily, that actually broke structure, because this right here was a structural high and that was broken. As this structural high was broken, it left behind a couple of levels of demand, one being a level inside of here that was broken. But as I was looking at the crypto 30 index, the crypto 30 index actually had levels further down, which led me to believe that this for Bitcoin was just inducement. And you can pretty much see how heavily, how fast price moves through that level. Like literally in one candle, one daily candle, it moves straight through the level, taking out all the positions, and eventually coming finally into the demand level that was most likely, in my opinion. And then realistically now what I'm expecting is a new high to be going put in. So this high put in this low put in this high is going to put in a higher low, and then this low is going to theoretically go and put in a higher high if it's going to withstand its flow of orders, which is the most probable outcome, which just means overall expecting a $48,000 Bitcoin in the near future, whether it be weeks, days, even a month to get there. Ultimately that is my bias. Dropping back down on the 4 hour, we can play the story, and this story was really nice for me because it did a lot. So taking the 4 hour, inside of the 4 hour we have a change of character in here. Inside the daily, sorry, this is a daily demand level. Price change character right here. Price left behind a demand level that called the initial change of character. Price mitigates that demand with the wick. Then price gets taken out again. Internal break of structure, and the only demand that was left over in this whole entire daily level was this origin of the 4 hour, right? And this is just a demand chain then from there. So we had rest in liquidity in these areas, and then if we just pull that out, we just pull that out and pull this all across, you can see that it's the 4 hour level exactly that we end up reacting to. And the reason that I anticipated the further 4 hour level down on my Instagram, which I will link in the description, is because, well, as price taps into the daily, the nearest change of character would have to come from up here, from this supply level up here, which means it's going to have to have a aggressive reaction, take out this level, and then come down and mitigate it, which is a lot less probable than and it hasn't yet mitigated the extreme of the H4. So what I was expecting is, well, as price comes in here, it'll create liquidity, which is just inducing buy-side liquidity, inducing buyers into the market. It will create that liquidity, giving people that idealistic false hope of seeing price increase. And you can see that when price taps in, pushes up, comes back down, and then has an internal break of structure, there's a lot of small retail traders that are looking at that and thinking, that's exactly what I'm looking for. Momentum has now shifted, when in actuality that just all becomes liquidity. And as we can see, liquidity gets cleared, taken straight out, and then tapped straight into our H4 perfectly. And on a lower time frame, that wick represents very much so a V-shape recovery. If we drop down onto, say, the 15 minute, you'll see it's a move in. It's a move in and an aggressive move in, and then an aggressive move straight back out, which leads it to be a V-shaped recovery. If we drop on the H1, you might see it clearer. Aggressive move in, aggressive move out, causing on that key time frame of the 4 hour, our first change of character, which comes from when our initial supply gets broken. And then also a break-in minor structure from this high right here, even this high, that put in this low right here. So have my eyes on this level here for more orders. Had orders resting in here, which gives the current ratio of 4R if traded with a stop loss. As I don't trade crypto, as I told you, I had resting orders on here, and so far a 5% increase, pretty much. Well, it was overnight. We have midnight, and now it's 8 p.m. It's not 8 p.m. for me. It's actually 10:30 a.m. But midnight, whatever time zone this is, to 8 p.m. So this is literally within 24 hours. We've seen a 5% increase from when our positions got tagged, and more positions will be loaded in here. For me, a little bit differently. I'm going to wait for a different type of confirmation. But nonetheless, area that I'm looking for longs for sure. And in theory, like, I'm not saying this is set in stone, but it is absolutely logical, is that like order flow is just order flow, and so theoretically we should go and see a first and foremost a $48,000 Bitcoin, and then if you take out from a fractal perspective, which is my favorite thing about trading, is the fact that how fractal it is. I'm not sure if you guys can see this, but our swing high puts in a swing low, that swing high puts in a high, that puts in a low, and now order flow has shifted back bullish, which should look something like this, and that's the footprint that we're playing out. And so of course there's going to be lots of ups and downs on the way, especially on these higher time frames, but nonetheless, now I've had a change of character. For certain, this level up here is considered weak for me. That's a weak high. Which essentially means that it's going to get ran for liquidity, especially now we've had that confirmation of that change of character. I am very much expecting in the near future a $48,300 Bitcoin in the short term, and I'll be looking forward to seeing that play out, and I'll be looking forward to you guys to be early to the party, because we are going to be expecting a nice 20 to 22% increase over the next X duration of time that it takes for this analysis to play out. But guys, all in all, that wraps up the Bitcoin breakdown video. I hope you guys enjoyed it. If you did enjoy it, go and smash that like button, hit that subscribe, and hit that bell notification to be notified every time that we drop a new video. We're constantly updating the crypto market, and yeah, we are the best to be doing it. So without further ado, guys, I'll see you guys in the next one. Thank you for being here, and goodbye.